Welcome back to BestProp4U. Bitcoin is going through a massive shakeup right now, and two massive macro drivers are to blame. First, the crypto space was roiled when Michael Saylor strategy actually sold just 32 Bitcoin, the first sales in years, and he actually broke his famous never sell doctrine. While it was just like 2.5 million or so to monetize capital gains, the psychological impact caused a cascade. Buyers essentially vanished. Although Saylor quickly reversed course and bought over 100 million worth of Bitcoin just days later to buy the dip, the damage to sentiment was done. Now, to make matters worse for risk assets, of course, last week's NFP jobs report came in very hot. The US added 172,000 jobs in May, smashing expectations of just 80K to 85. With the labor market now remaining highly resilient, the chance of the Federal Reserve maintaining or even hiking interest rates have increased significantly. I think we are sitting around 70% of a hike this year now, putting downward pressure on Bitcoin. So let's jump into charts to see what the price action is telling us. So obviously, drop, drop, drop. On the RSI, we look oversold. There is no signal of potential move of potential decent bounce, at least for now. But technically speaking, we could be looking at a double bottom formation here. And if we do see a double bottom formation here, it would suggest that the neckline sits at 83.50, and then of course the neckline breakout would open the door to the measured move projection, which comes at 107K. That is a big if, and it needs, of course, a lot of catalysts and a lot of validations to happen on the way up. But this is an incredible, dangerous area. As I said, no bullish divergence. If we lose this support, the floor falls out. Now, remember these flag pattern that we've actually flagged last time. This is now the breakdown of that flag. And if we use a measurement projection from the breakout point, we come exactly where we were actually, where we faced support. So that's one thing to remember, that this level is respected. However, since we are here and we're looking at an impulse, the next best thing we could do is to associate the next level to the downside with the Fibonacci's. You see also it is a 61.8 Fibo. Then we have the 52K, which is 78.6, and the 100%, which is at 43.83. Now, what we're going to do is see if this aligns with any of the other structures that will look on the left side of the chart. And look at this. The 78.6, 52K or so, this is a very important area. And then we go down to just below the 50K. That's psychological support, okay? So this is a very important level, to be fair. And in case we do break loose, that will be the next logical target, major target, since we're going to be below the 60K trading clean, below that psychological resistance now. So down on the 4 hour, we don't need this any longer, to be fair. Down on the 4 hour, what we do see is that we see an extreme impulse to the downside, but there is a sliver of hope for the bulls. If price pulls back slightly to retest the previous low at 59K, let's say, it is very likely that we're going to form a hidden bullish divergence. And that could signal that this current drop is in its fifth and final wave down and could be a setup for a reversal. For example, 1, 2, 3, 4, and 5 with a divergence. And then off we go. Now, importantly, we do see the Bollinger Bands getting flat over here, right? And we did stop at the 64K up here. And we see some sort of convergence now. And we are looking perhaps at a double bottom at 59.70 or so, or perhaps even all the way down here since we have the 61 point. It could be a retest. Actually, as we said, we want the prices to go below that low to have this hidden bullish divergence, because that will add more confirmation that there is at least an opportunity for a bounce. So what I've been looking is something like this. At least a bounce all the way up to the previous Bollinger Band, unless if we get another breakout lower down. Okay. Now, another scenario, of course, that we need to take into consideration, and as we did before, if we take that impulse into account, we're not just looking at that, but we're looking at the 55K and then down at 52.20, 52.68, since these also align with the other Fibonacci extension levels that we used on the daily chart. And as always, what are the chances of a real reversal down at that level? If you look at it from a long to short-term perspective, we also see another flag here, right? And since we did identify earlier that the measured move actually worked, was respected, if we take again the breakout from breakout level, right, the measured move brings us down to 59K. So there is a high likelihood that we're going to revisit that low, okay? And this is where we have to start paying attention in terms of price action to see a potential bounce, even in the short term. And we're looking at 64K as the potential target. Now, if we do break lower, of course, as I said, we identified some levels, the 55, the 52 zone, and then we'll go below 50. Versus the upside, as we identified earlier, would be a much bigger opportunity for bulls. There we go. In the scenario that this is eventually going to pan out as a double bottom formation.